With earnings season well underway, one company's recent performance has brought me back to a question I've been thinking about since 2022. And that question is, of course, is Intel cooked? Or at least, are they on the path to becoming irrelevant? This is a question that, again, I brought up in 2022 specifically because Intel became a major recipient of the CHIPS Act. And it was at this time that Intel was facing a lot of headwinds. Now, since that moment in time, they haven't actually gotten better. But I kind of want to look at what's going on with Intel, where I think the company might be headed, and talk about some of the factors that are actually facing Intel's performance. So, as I just mentioned, Intel basically since 2018 hasn't been performing that well. In fact, it's lost its position as the dominant market share of actually the foundry business. And we can kind of attribute this back to something I mentioned in an earlier video, that being my ASML breakdown and stock valuation. And in that, I described a 2016 partnership between ASML, Taiwan Semiconductors, and Samsung, all trying to utilize EUV technology to create the next generation of the most advanced chips on Earth. Now, at the time, I mentioned it a little bit, but we'll go a bit more in depth here. That partnership actually wouldn't have ever happened because Intel was approached first by ASML about utilizing EUV technology. And at the time, Intel didn't think they would even be feasible because EUV was a technology that had basically just been a money vacuum and there weren't necessarily a lot of real results. And Intel didn't think that DUV, at that time the dominant manufacturing for lithography for chips, was going to be kind of made obsolete by this new technology that really hadn't seen all that much success yet. So Intel willingly basically gave the keys to Taiwan Semiconductors in 2018 when TSM came out with chips that utilized this EUV technology. And nothing shows that clearer than just looking at the straight up revenue for Intel. Now, since that moment in time, Intel basically gave them the keys, and it wasn't until 5 years later in 2023 that Intel utilized any EUV in their process for chip manufacturing. And since then, they've basically become obsolete in the foundry business outside of the most advanced chips on Earth, where, of course, the EUV technology is going to be utilized. I'm not saying Intel is an absolute crapper and they don't do anything. They still bring in billions of revenue. It's just that those are mostly going to be coming from chips that are not the single most advanced chips on Earth. Now, since 2018, Intel has been kind of on a downward slope. There are a lot of questions being raised about whether Intel will ever get to the revenue or profit numbers they saw at their high in 2021. Actually, and this is kind of surprising, in 2024, they had less revenue than 2016. That doesn't even account for inflation. Just pure numbers wise, not taking into account inflation, they had less in revenue than the company had in 2016. I cannot think of a company that has that type of growth that would be super excited about their prospects. And Intel shares since then have really traded like a company whose prospects are drying up. I think one of the things that really solidifies the concerns for Intel that I found very, very interesting was a couple years ago, both Taiwan Semiconductors and Broadcom looked at acquiring individual units of Intel's business. And again, Intel wasn't doing hot, so pretty much all of the chips were in TSM and Broadcom's hands in this negotiation price. They would have definitely gotten some great prices on things if they had found ways to split it up. And they looked for maybe gutting individual fabs that they could then kind of fix up and utilize in their own business. And at the end of this examination from both the competitors couldn't find a single thing they wanted from Intel. And again, this is a company that really didn't have the chips in the negotiation process. They're losing market share tremendously. They're losing revenue year over year. This is a company that desperately needed something to go in their way, and they couldn't even convince TSM or Broadcom to basically take advantage of them. I think an example that really kind of shows basically how big of a deal this is Imagine that Intel were, for instance, in the real estate business and they had this massive skyscraper in just a primo location. Think Manhattan, massive skyscraper. And, sure, it's seen better days, right? It's definitely seen some better days and it's a bit away from its heyday, but it's still in a primo location. Now, take TSM and Broadcom. These are two companies that want to get into the real estate space, and they're looking in these primo locations, and they look, oh, Intel's looking to sell. Maybe the owners of the Intel retail space are just kind of done with it. They want an exit. So TSM and Broadcom are like, okay, I mean, it's in this primo spot. Maybe we can tour it. And as they're touring it, they start to realize that it's really, really dilapidated and there's mold everywhere and it's crappy, and it's actually going to be cheaper for them to build a completely separate skyscraper than gut out this skyscraper and utilize it for their own purposes. That is a dumbed down version of the situation Intel went through. If that does not speak volumes to just how far behind Intel is in the game, I don't know what is. And it's more impressive when you consider kind of some of the outside circumstances of a TSM that you would really want to have more fabs in the United States outside of the Arizona fab. And this would be a dream come true to create more fabs. But the fabs are just so dead, so dilapidated, so outdated, so non-competitive that TSM can't even find a reason to get a fire sale price on it. What Intel's going through isn't necessarily super uncommon. In fact, in the business life cycle, we've seen a lot of companies go through this, such as recently IBM. It's just IBM was able to completely reinvent themselves and reinvent their business model, going from focusing on hardware where they were kind of losing over time to switching to more software focused and more acquisition focused and just completely doing a switch up and rebranding for IBM. And this is something that a lot of companies have had to go through, and a lot of them have pivoted successfully. It's just Intel so far hasn't been able to do that. Now, one of the biggest updates in the Intel thesis was, of course, the United States taking an ownership share in Intel. Basically, from that same Chips Act I mentioned in 2022, the United States kind of converted the last little bit into an equity deal so that the United States, the entire government, would take a 10% stake in Intel. So basically, your tax dollars that would have gone to fueling Intel now own Intel shares. I just thought I should frame that for reference because it's something I've thought about quite a bit in a separate way. But this isn't necessarily uncommon. The government has done this before. What is uncommon is the financial situation of Intel, because when the United States has taken big stakes into these publicly traded companies, it was such as the 2008 financial recession, where the companies they took stakes in were really looking at potentially going under, such as Freddie and Fannie, and then also AIG, GM, Chrysler, and even Citigroup. And they basically sold out of most of these positions in 2014 outside of Freddie and Fannie. But the emphasis is that this is a time when it's just Intel's doing bad. The rest of the market is still doing amazingly. Is it slightly propped up by massive AI spending? I would gander a little bit. I think that's a different conversation, but the point being, we're not in a major recession, and it's not like they're having to hop in to save the global ecosystem. Right now, they're just trying to save their failing United States foundry business by taking the share, which is pretty uncommon for the United States. Now, Intel actually saw really positive action in its share price from the United States taking an ownership share in it. And this is something that I personally didn't necessarily see coming, and it surprised me a bit. I mean, it makes sense that people would be excited about the United States having an ownership share in a company, and that surely signals that it's at least going to have a better floor. But for me, what was kind of concerning is that this is a thing we've seen overseas in China, and it's almost the second the Chinese government invests in a company, it's kind of in game. And while certainly I don't think that the United States is going to treat Intel how the Chinese government does, where the Chinese government will come in and be like, hey, so listen, you have just an amazing company that makes stuffed animals. How would you like to become a spying agency for the Chinese government? I don't think the US is going to go to that extent, but certainly it brings in some questions about incentives and the incentive structure that Intel's going to be going through. So, what do I mean by it's going to bring this incentive structure into question? Well, I guess what I'm more worried about in terms of Intel's financial health is that now, instead of just doing what makes economic sense for the company, Intel's going to be kind of pushed into doing what the administration wants. I'll give a brief example just to kind of demonstrate what I'm talking about. Let's say Intel has a fab. It doesn't really matter where, let's just say Detroit. Just throw out a random city. Let's say this fab in Detroit, it's pretty unprofitable. Like maybe TSM came, walked around it and said, yeah, you guys are light years behind. I'm not even worried about the competition. This thing sucks. And then left town, right? And Intel is stuck with this fab that is years behind it. It doesn't have the capacity to actually make production and compete. And it's very, very, very unprofitable for the business. And then additionally, in order to get it up to profitability, they'd have to put a significant spend into it. And maybe there's a really good chance they wouldn't even see a positive ROI. It's more likely than not that they'd put all of this money into this fab and then for what? It'd still be a massive money vacuum. This would be something that for most executive teams, they'd look at and easily be like, okay, it's unprofitable. There's not really a solid line to get to profitability. There's not a good roadmap for us. We're just going to shut down the fab and move on and try and find somewhere else to make a profitable fab. But someone like the United States government might see this as if they let this fab fail, let's say it's a massive employer in the area, they're going to get a lot of pushback. And God forbid Intel take this fab and then move it overseas where it's cheaper. So they might actually push Intel, hey, no, you need to keep this open. We don't care that it's going to be a negative in terms of your actual what makes sense for the company. We don't want the bad visuals of letting this massive job supplier in the area fail and losing our voter base. Like, that is a serious concern that could potentially happen. And it might not just be like that, for example, but there are many decisions that are made for economic reasons that will allow the company to have financial health and success. And as we've seen when governments take stakes into private companies, those ideas and pathways don't always align for what the company needs to stay relevant and compete versus what the administration that has a stake in that company wants it to do for good visuals. Now, the other part of this equation is how is the government now incentivized to get a return on its investment? Now that it not only is putting money into the American semi production, what are they going to do in order to ensure that they actually see a good ROI, good return on investment? And this is again where it gets a bit shady. They could try and pass some legislation. And again, this is all just, I'm just throwing out ideas they could do. I don't want to like accuse, like, this is going to happen. I don't want people to think like that. It's just my job to try and kind of think about these things. But there could be some ways they could incentivize companies that instead of going with the better, more powerful chips, from Taiwan, they're now incentivized to go with the less good, kind of crappier chips from Intel, and then everyone loses in that instance because let's say the chips in the cars, right? Going to a 2022 example I'll touch on in a little bit, but let's say they now have to switch, car producers now have to switch from these really efficient, high powered chips to these really crappy Raspberry Pi level chips, from Intel. Again, not saying Intel is peak Raspberry Pi chips, but let's just say they have to switch. Now the consumers are hurt too, not just the businesses that are producing the cars and have to make crappier products. Now the customers actually end up much worse overall because these companies are being forced to make worse products so that the government gets a good ROI. That's a situation I see that is highly likely. Additionally, another area where the government might kind of see a chance to make a good ROI, and I will get a little bit tinfoil hatty. I'm not saying this is happening by any means, but it does make sense. Taiwan Semiconductors, the name implies it, their headquarters is in Taiwan, and they've done an incredible job spacing out their fabs globally. They're by far the dominant market player in the foundry business, and they've basically killed the American semiconductor industry as a whole. The big concern, and why oftentimes in Taiwan semiconductor valuations, you see that it trades at an insane discount relative to best estimates of fair value. Yes, even as a semiconductor in this space, it trades at a significant discount. And that is, of course, because you are pricing in the risk that China has said numerous times, especially recently, that they're going to be invading Taiwan and taking it back. But that is a real risk for this business, right? And currently, TSM is one of the only things that stands in the way of China actually coming back and taking over Taiwan is TSM has said, "Hey, we'll blow up all of our plants if you guys invade us." And if anyone was trying to buy a car in 2022 around that time, you know what a chip shortage can mean. And that's just in one area, that's just in cars. Imagine a global chip shortage. It would be horrible. It would be detrimental to the actual world and the ecosystem of the world's business model, right? But let's say, for instance, that now that the United States has a 10% stake in a company that is a one on one competitor with TSM and also the smaller competitor, it needs to earn market share. Are they now incentivized? I'm not saying they're going to call up China and be like, hey guys, we heard you wanted to take back Taiwan and bring it into the mainland. Shit, we'll just do it ourselves. I'm not saying they go like fully that level. What I'm saying is, are they now incentivized to put less into helping Taiwan than they otherwise might have, regardless of if they had had a stake or not? I think personally the US government might now be incentivized to kind of provide less support than they otherwise would have been. And again, it's just because it has completely shifted the incentives. Because if you want to guarantee that your shares are going to come up and really appreciate in value, how about essentially the elimination or a massive hit to one of their main competitors? That's basically a way to guarantee that your company is in a better position now than its competitor is, their homeland fabs getting destroyed. Now, again, TSM, they're brilliant people, and if we as investors kind of have these concerns, their management team is preparing for this all the time. And that's really been shown with their global strategy, even having fabs out in Arizona. But it still is the case that their most advanced fabs are residing in Taiwan. So, overall, with Intel now being basically a reserve asset that the United States has ownership share in, I don't buy the thesis that this is going to be like implementing a new ceiling. Instead, I think the US basically just ensures that Intel won't fall flat on its face, or will fall flat on its face at a slower pace than they might have otherwise been if just left to compete with the giants of the industry. So, again, I don't necessarily see this as a second reawakening for Intel by any means. I just see this as kind of like putting in place guardrails in a way, because now the government is incentivized to not let Intel fail. They have become too big to fail as a part of the United States holdings. So that's how I feel on the Intel shares and the United States having an ownership stake in it. Now, one of the reasons that I really got excited about making this video is, of course, as I mentioned earlier, Intel just reported its earnings, and it pulled a classic Intel, down 17% in a day, and since it's a high on January 22nd, one day before reporting earnings, they're down about 22%. And in Intel fashion, it wasn't because they had a bad quarter per se. They actually beat revenue estimates and beat adjusted EPS estimates. The problem was their 2026 guidance they came out with. Even the CFO said they can't meet the demand of their customers. And again, as I've mentioned, they aren't even a dominant market player. Like they don't have the most market share. So it's really concerning if a smaller trying to mount a comeback company can't meet the demand of its customers. It's not like TSM that has 95% of the market of the single most advanced chips on earth. This is a company that's really struggling to basically reinvent themselves and make investors not lose hope in Intel, saying, yeah, we can't do it. And it's so sad to watch. It, I mean, it's crazy to think that not that long ago at all, Intel was seen as the dominant player, and the United States was a massive name in semiconductors. And sure, Taiwan is basically specialized into becoming a semiconductor hub, but it's just so sad to see a company that is trying to mount a comeback be like, we can't do it. We just can't do it. So, overall, I'm not thinking that Intel is necessarily setting example that it is going to be performing well in the future. Personally, I think this is a company that grandma would be very, very disappointed in. Though, to be fair to that one kid, if he had actually held on to the shares, which I have a sneaking suspicion he didn't, he would have had an opportunity to sell at a positive. So maybe that grandma's inheritance to her grandson was not completely thrown down the drain. But overall, grandma is very sad about the direction of Intel. So, yeah. Overall, thank you for checking out my video. I really appreciate your time. I hope I was able to provide some insight into kind of some of the things I'm thinking about with Intel, the direction of the company. I really like trying to dive into semiconductors, not only because it's so complicated that it gives me kind of like a fun thing. I feel like you learn something, you keep learning, and you still, in the grand scheme of things, know nothing just because of how complicated the not only the like actual products are, but also just the supply chain at this point. It's so spread out. No company does like a bunch of stuff. They all specialize into their one area, and it's really fun to keep up with. But overall, this person will not be parting money to throw it away on Intel. And I hope a lot of you aren't paying for a 900 PE ratio either in your investing. So overall, thank you very much for checking out today's video. If you found it interesting or funny or whatever, please drop a like, comment, subscribe, and I hope to see you guys on the next one. So thank you.